very warm welcome to the start of the first week in the month of March 2026. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Aguarago. It's Monday, the 2nd of March. We hope you had a great weekend.
Off with your news now. U.S. Israel-Iran tensions escalated over the weekend following military strikes and heightened naval activity in and around the Strait of Hormuz, a key global energy choke point. The developments rattled oil markets, with Brent crude jumping by around 10 to 13% to trade near $82 a barrel as investors priced in the risk of supply disruptions. Around 20% of global oil shipments and a significant share of LNG exports passed through the strait. Iranian warnings to shipping and reports of attacks on vessels raised fears of a partial or full disruption, prompting some tankers to delay transit and pushing insurance costs for ships operating in the region. Analysts warn that if tensions persist or escalate further, oil prices could climb towards or above $100 a barrel, adding pressure to global inflation, transport costs, and economic growth, particularly for oil importing countries. While OPEC Plus has signaled a modest output increase from April, markets remain focused on geopolitical risks, with volatility expected to stay elevated as long as the Strait of Hormuz remains under threat. In earnings news, Johannesburg Stock Exchange posts record results for 2025 with double-digit growth. The JSE reported net profit after tax of 1,071 million rands, up 16.7%, and headline earnings per share of 1,329 cents, rising 17.7% year-on-year. Return on equity improved to 22% from 20.2%. Operating income rose 14.2% to 3.5 billion rand, driven by strong performance across capital markets, post-trade services, information services, and JSE Clear. The group maintained a strong cash position, with cash balances up 12.7% to 3.2 billion rand, enabling an ordinary dividend of 961 cents per share and a special dividend of 100 cents, resulting in a total dividend increase of 28.1% year-on-year. In Nigeria, the Dangote Group has appointed Stanbic IBTC Capital, Fertiva Capital Management, and First Capital as lead banks for the listing of Dangote Petroleum Refinery and Petrochemicals FZE on the Nigerian exchange. The group plans to float 5 to 10% of the $20 billion refinery, with a debut valuation estimated between $40 billion and $50 billion, potentially making it the largest equity offering in Africa. Investors will have the option to buy shares in Naira and receive dividends in US dollars, reducing currency risk, pending regulatory approval from the SEC and NGX. The structure aims to leverage the refinery's projected $6.4 billion in annual export revenue. In other news, over the years, the monetary policy challenge has grown from a concept into a key platform linking economic policy with young students in Rwanda. Now, in its 6th edition, the initiative brings together top economic students, sharpening their analytical skills and deepening their understanding of Rwanda's economic landscape through practical, policy-focused applications.
As the economic landscape becomes increasingly dynamic, interconnected, but also unpredictable and complex, as central bank, as Rwanda, a country, we know that the need for well-trained and forward-looking professionals has never been greater. Initiatives such as the Monetary Policy Challenge are therefore important in equipping young people with the knowledge, discipline, and ethical grounding required to navigate uncertainty and support sustainable economic growth of Rwanda. Looking ahead, we expect this monetary policy challenge to continue evolving in both scope and depth, participants are encouraged to not only demonstrate technical competence, but also show independent thinking, sound judgment, and an appreciation for the broader economic context in which monetary policy operates. We look forward to policy recommendations that are innovative, well-reasoned, and grounded in data, while remaining mindful of Rwanda's development priorities and the dynamic global economic conditions. And in closing, I would like to once again thank the Honorable Minister for joining us this afternoon. We really appreciate you giving us and our youth time for this monetary policy challenge. She was telling me that probably we should go to Mineduc and do the same presentation for them to understand better monetary policy. As the economic landscape.
In the meantime, Vodafone signs deal with Amazon Leo to connect 4G and 5G networks in remote European and African areas. The mobile company will use Amazon's low Earth orbit satellite network to link base stations, providing download speeds of up to 1 gigabyte per second and upload speeds of 400 megabytes per second, reducing the need for fiber installation. The initiative will begin this year in Germany and other European countries with progressive rollout across Africa via subsidiary Vodacom. Nigerian Exchange Group posts strong results for 2025 with double-digit revenue growth. The group reported core revenue of 22.9 billion naira, up 36%, and operating profit of 11.8 billion naira, a 44.4% increase year-on-year. Profit before tax rose 15.6 billion naira with EPS of 4.75 naira, supported by lower finance costs and improved operating margins. As at December 31, 2025, total assets grew 71 billion naira and shareholders' equity strengthened to 55.2 billion naira, reflecting a conservative capital structure and enhanced solvency. The board declared a final cash dividend of 2 naira per share, bringing total dividend to 3 naira, up 50% year-on-year, and approved a 1-for-3 bonus share issue, rewarding shareholders while maintaining financial flexibility. Finally, on News Now, the Committee of SADC Stock Exchanges has announced the establishment of the SADC Capital Markets Association, SACMA, to advance regional capital market development and integration. Announced in Gaborone, Botswana on February 25, 2026, SACMA will serve as an inclusive platform bringing together stock exchanges, market intermediaries, and stakeholders across the SADC region. COSE, which represents 14 stock exchanges, will act as the executive arm. SACMA will focus on market integration, innovation, capacity building, and mobilizing long-term capital for regional development while complementing national and regional regulatory frameworks. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly with Grace at the FMDQ ticker tape room, giving us our market updates. Stay
We founded the Tony Melu Foundation 15 years ago, and I'm happy to say that to date we have supported over 24,000 young African men and women, each one given a non-refundable seed capital of $5,000 and trained for 12 weeks and mentors appointed for them, etc. Out of this, about 21% of these entrepreneurs are in the agribusiness and agricultural space. And out of about 5,400 people have benefited from this program, and they are invested in agriculture and businesses. And out of the 55% of them are women, females, okay? And we like that because we've seen that empowering women is like empowering communities, nations, etc., and they succeed. And it's not by chance that we have two of our panelists here, women. And what we have seen, the people we have supported, is that they have helped to create jobs.
We are following over 600 technologies, technology by technology. What is the maturity level? How much investment goes? Where are they happening? And what are the policies pushing those technologies? And it is one of the basis of our annual work on energy technology perspectives. But technological breakthroughs don't happen just like that. Somebody clever comes and comes up with idea, a genius person. There may be genius persons, but the genius person to work, we need stability, political stability for the investors, for the researchers, for the startups. And countries who provide the stability and the technological innovation made very, very good results. I want to give you one, in my view, for my European friends and colleagues, rather bitter example. First of all, I should say that in the year 2025, when we look at all the power plants installed in 2025, close to 2/3 are solar panels. This is a data, this is a number. And these solar panels, more than 80% of the solar panels are manufactured in one single country, China.
Welcome back to Money Moves. Let's now go over to Grace for today's market review. Hello there again, Grace.
Thank you, Melissa. Let's now track how the markets open trading for the week and the month, starting off with the equities as usual. The Nigerian Stock Exchange All-Share Index climbed 1.39%, while the BRVM edged up 0.24% to 418.71. The Nairobi Securities Exchange slipped 0.33% to 215.36. In the south, the Johannesburg Stock Exchange fell 0.69%, and Mauritius SEMDEX dropped 1.26% to 2,290.21. In North Africa, Morocco's MASI tumbled 4.21%, while Egypt's EGX30 declined 0.61% to 47,692.49. On the currency front, the rand weakened 1.21% to 16.13 against the US dollar. The Egyptian pound slid 2.51% to 49.16. The CFA franc fell 0.71% to 559.68. The Kenyan shilling softened 0.12% to 129.08. The Moroccan dirham lost 0.85% to 9.22, and the naira weakened 0.80% to 1,369 naira 04 kobo as at 13:51 GMT. Tensions in the Middle East reignited concerns over supply disruptions across key energy corridors as geopolitical risks feeds into market sentiment. Energy traders are closely watching price movements for early signs of volatility. Here's a look at how global energy prices, commodities are trading in response. Brent crude surged 8.69% to $79.20. US WTI jumped 7.85% to $72.28. Natural gas advanced 6.33% to $3.04, while Arabian gasoline climbed 5.21% to $2.40 as at 13:44 GMT. Finally, two metals prices. Gold rallied 3.27% to $5,419.40. Copper slipped 0.77%. Platinum eased 0.86%. Aluminium edged up 0.08%, while iron ore was flat at $99.06 as at 13:45 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and we'll see you all same time tomorrow.